Hello friends, welcome back to WealthWisdomHub, where your go-to channel where we explore the latest in the world of technology and finance. Today we dive into the intriguing journey of Paytm, the digital payment giant that revolutionized the way India transacts. From its humble beginning in 2010, becoming a financial powerhouse, Paytm has faced both strengths and challenges. Join us as we unravel the story of Paytm's growth and the recent hurdles that have put future in question. So let's get started. So in today's video, we'll be covering the history of Paytm, the rise of Paytm, what is the difference between Paytm and Paytm Payment Bank, what are the problems faced by Paytm, and what lies ahead in the future for Paytm. We'll also be covering other important topics and are discussing the pertinent issues around Paytm. So please watch this video till the end. So let's start. So first, we'll see what is Paytm. I'm sure many of our viewers may not be aware that Paytm is a short form of Pay Through Mobile. So it was launched in 2010. The founder is Mr. Vijay Shankar Sharma. Initially, he started the company 197 Communications in 2000, and it was mainly providing services for mobile content, and basically it was dealing with Airtel, and they were providing caller tunes, ringtones to the subscribers. Slowly, as the government was pushing towards the digital payments and it was encouraging the digital transactions, the Paytm launched in 2010 as a platform for mobile recharge by him. It capitalized on India's growing smartphone penetration and the government's push for digital transactions. Paytm's user-friendly interface and strategic partnership with major retailers and service providers fueled its rapid growth. By 2015, it had become India's leading digital payments platform, boasting millions of users and processing billions of dollars in transactions. Mr. Sharma is a charismatic lead and vocal leader. He became a poster boy for India's startup revolution. Paytm attracted major investments, including from SoftBank and Alibaba, further propelling its growth. The company expanded its offering beyond payments, venturing into e-commerce, wealth management, and other financial services. Now we see how it has grown, the growth of Paytm. So Paytm monthly active users surpass 10 crores as per the reports of January 23rd, 2024. As of January 24, the Paytm boasts over 300 million wallets and 30 million bank accounts, reflecting widespread adoption. Paytm has also become India's first payment app to cross 10 crore app downloads in 2017. So you can imagine the reach Paytm is having, and also it almost becomes synonym with the digital payment in India. Then Paytm came up with an IPO. The 197 Communications, the parent company of Paytm, in November 2021, pulled off a successful IPO, raising a whopping 18,300 crore rupees and reaching a $20 billion valuation. But the shares have continuously declined after the listing, and it has given a negative return for the investors. And people are also commenting that it has given very lucrative exit for the initial investors like SoftBank and Alibaba, and the local investors, the domestic investors, especially the retail investors, they have paid the price for them. So now people are saying that Paytm Payment Bank has been barred and it is finished, but there is a difference between Paytm company, Paytm UPI we are using wallets, and the Paytm Payment Bank. So what are the difference? While both are the part of Paytm ecosystem only, they serve different purposes, like Paytm as a different platform, a digital platform, and Paytm Payment Bank as a licensed payment bank. Question arises on Paytm's future without the payment bank, as it loses differentiation against rivals like PhonePe and Google Pay. Now, this payment bank thing was the main differentiator between other digital payment providers and Paytm, because it was having its own bank also, which no other digital payment app has been able to do till now. So, if Paytm loses this differentiator, it will be facing a very tough competition from PhonePe and Google Pay. Now we'll see what is a payment bank, because we are hearing that it is payment bank. So we should know what is the payment bank. So according to Reserve Bank of India guidelines, the payment bank, the main objective of the payment bank is to enhance financial inclusion. It is expected to be done by providing small saving accounts, payments and remittance service to migrant labor workforce, low-income households, small businesses, other unauthorized sector entities and other users. So it was meant to serve mainly unorganized sector and small depositors in the country. So there are some major difference between the commercial bank and the payment bank. So the first difference is deposit amount. The basic difference between a payment bank and a commercial bank is that a payment bank can accept deposit only up to rupees 2 lakhs per customer, while there is no such limit for a commercial bank. Earlier this limit was rupees 1 lakh only. Later on it was enhanced. Minimum capital requirement for a payment bank is just rupees 100 crore, whereas for a normal commercial bank it is much higher. Loans. The payment banks cannot provide loan facilities. NRI deposits also they cannot accept. Credit cards. The payment banks, they are allowed to issue ATM card, but they are not allowed to issue credit cards. Government securities. Now, payment banks should invest 75% of their total demand deposits in government securities with a maturity period of at least 1 year, while commercial banks have to invest maximum just 22% of demand deposits in such securities. Payment banks usually have a higher interest rate also on deposits, so they are providing higher interest rate also to gather more and more deposit. They have also a unique process of onboarding customers, because they are using a digital and paperless onboarding process for customers, whereas the commercial bank, they use normal onboarding process majorly with paper. So there was an initial problem faced by Paytm company. In 2018, Paytm faced a significant challenge when its e-commerce arm, Paytm Mall, allegedly experienced a major data breach on August 30. On September 18, 2020 also, Google Play Store abruptly removed the Paytm app, alleging for breaking rules regarding unlicensed gambling app. But later on it was restored. Now we'll see what are the issues with Paytm Payment Bank and why this controversy has emerged. The Paytm journey has not been without hurdles. Intense competition from other digital wallets like PhonePe and Google Pay eroded its market share. The company's aggressive expansion into new ventures led to concerns about profitability and focus. Regulatory changes and increased scrutiny from authorities added to the pressure. So we'll see the timeline of the event, how the events have unfolded for the Paytm Payments Bank. So in November 2017, the bank started its operations. In June 2018 itself, within 1 year, you can see the first action came from RBI as it banned the onboarding of customers. A year later, 2019, the RBI allowed customers enrollment after some compliance by the bank. Again in October 2021, RBI imposed a penalty of 1 crore. So RBI has been concerned, it has been giving warning to the company. In March 2022, RBI again took action against the Paytm Payment Bank due to non-compliance and ordered Paytm Payment Bank to stop accepting new clients owing to supervisory concerns. In October 2023 also, penalty of rupees 5 crore was imposed on the company. In January 2024, RBI came out with the action banning the company from accepting deposits and credits in Paytm payment bank. So, on January 31st, RBI issued a notice barring Paytm payment bank from accepting deposits, top-ups in any customer account, wallets, and FASTags after February 29. The RBI action stems from persistent non-compliance and ongoing supervisory concerns within the bank. Security agencies are also looking at the possibility of the entity being used as a front for laundering money. So, why RBI took action? Because the company could not cure certain defects despite the earlier regulatory action in March 2022. And as you can see from the timeline, they have been pursuing with the company repeatedly, imposing fines and taking action against them. But there was no improvement, no major improvement. The company could not improve its compliance levels. And also, the RBI maybe if by the fact that the company reported false compliances to the regulator, and which is not acceptable to, which will never be acceptable to any regulator. You cannot lie to them. You cannot do false reporting. So now we'll see what will the future of Paytm after the shutdown. So after 29th February, they will not be able to accept any deposit, and slowly the customers will go away. So what will be the future of the Paytm? After the RBI decided to restrict its banking services, Paytm's future is unclear and will rely on how soon and efficiently the firm can fix the problems and resume regular business operations. Among the situations that might occur are: first, the Paytm supervisory issues and RBI regulations compliance could remove limits in months. So if Paytm complies with the issues and shows improvement, the RBI can remove the limits in the coming months, allowing it to resume financial services, regain user trust, and increase market share. But that is the best case scenario. What can be the other consequences? The Paytm may fail to comply with RBI regulation, and it could lead to long-term limitations, increased competition, and potential fines or regulatory proceedings. So there are some reports in the market, in the newspapers, that RBI is going to suspend the banking license of the Paytm payment bank altogether. And also there were talk in the business circle that RBI has recommended and forwarded the details of the regulatory findings, the supervisory inspection findings to the ED for investigating Paytm payment bank for charges of money laundering also. Third scenario can be that Paytm's failure to comply. Paytm makes the decision to leave the banking industry altogether in order to concentrate on its other offerings, which includes loan, B2B solutions, and investments in stock and mutual funds. In this scenario, Paytm would see slower development and profitability, as well as a loss of distinctiveness and competitive advantage in the fintech market. In addition, it could have to handle the operational and legal difficulties of closing in its banking business also. So the situation is very grim for Paytm, and unless it put its house in order, the future is going to be very challenging and very uncertain for them. So friends, as we conclude our journey through the Paytm saga, one can't help but wonder about the uncertainties that lies ahead. Will Paytm overcome its regulatory hurdles and resume its banking services, or will it pivot towards other ventures? The fintech landscape is ever evolving, and Paytm's future remains a topic of intense speculation. Make sure to subscribe to our channel for the latest updates on Paytm and other tech giants shaping the financial landscape. Thank you for joining us, and until next time, stay tuned with our channel. If you like this video, please hit the like button, subscribe to our channel, and support us. Thank you for watching the video once again fully, and we'll be coming to you with our next video very soon. Till then, bye bye, take care.